Salman from Multibank Group. Just as an introduction, we pride ourselves on being one of the most heavily regulated financial institutions, with over 12 financial regulations and licenses, and MEX Global is also regulated by the Securities and Commodities Authority, ESCA. And we offer better than market trading conditions, with spreads as low as 2 cents on gold, zero commission trading, and withdrawals within 24 hours. We also boast a daily turnover of nearly $12.1 billion and have over 25 branches across major financial hubs and cities across the globe. And in terms of product offering, we offer thousands of products, so providing a wide range for our clients to select from, a diversified portfolio across several asset classes, which include Forex, commodities, metals, indices, shares, and even 200 crypto pairs. And so, for today, we'll be discussing, the current market dynamics, and be looking closer into how to navigate market volatility. All right? We'll be looking at the current macro regime, the emergence of mega trends, and the short to medium term outlook. So, currently in this new macro environment, we have high interest rates, slowing global growth, and moderating inflation. Okay? And if we look at the US dollar, we hit nearly a 2-decade high in late of last year, of 2022. Then we had in the US inflation pointing lower, and we also had the market expectation of a potential or severe recession. Okay? And now we are up nearly 2.57% year to date and have jumped nearly over 5% in the past 2 months. So what has changed? Well, we saw that the US experienced better than expected growth, right? And it was supported by a strong labor market and higher wages. And more importantly, we saw the repricing of interest rates, okay? So that had an impact. And so these factors of repricing of higher interest rates and a strong, better than expected average growth in the US will continue to support the US dollar in 2023, okay? And now when looking at the euro dollar, we see its failure to hold above the 100-day simple moving average that's indicated on the green line, and also is currently trading below the 200-day simple moving average, okay? And that, we essentially saw during around mid-September, when the ECB increased interest rates. However, we saw prices drop from 1.07 to 1.06. And that was could be to the fact that they signaled a pause or an end to rate hikes. So these are some important levels to watch in 2023, the 1.052 and 1.0429 level, okay? And also, in terms of performance, there's a strong contrast in terms of economic performance between the US and Euro, and the Eurozone, okay? And similarly, we see that with sterling, or the British pound, the failure to hold above its 100-day moving average, and currently trading below the 200-day moving average, and has currently breached this level, the 1.2188. And another important level to watch is the 1.199 level. Now, if there are any downgrades to the growth outlook for the UK, we can see prices falling even further. And so any of the two, for us to start seeing some signs of recovery, we would need to get prices back above the 200-day simple moving average. Now, the emergence of mega trends. Now, I'm sure all of us here have been flooded with AI. AI mentions AI. And that's true. This is an interesting chart I would like to show. And so basically, it is a chart from 2004 up until 2023. It's showing the number of mentions on public company earnings call. So the amount of times that public companies mentioned AI. And so you can see there has been an exponential growth here in 2023, had over 14,000 mentions. And so clearly there's, this AI buzz, but at the same time we have to understand that we're still in its infancy. And so with that, there's a lot of speculation and there's a lot of forecasts as to what it can bring in terms of global economic growth and adding to productivity and reducing labor costs and, basically helping the bottom line for companies. But given all of that, it's very hard to determine who are the clear winners and clear losers in the long run, okay? But when looking at some clear winners and clear losers, we're gonna jump to the next slide. But it's interesting to show because it's not only getting investor optimism, but also getting company excitement. So the companies that did benefit from the AI boom, we look at the Magnificent Seven. So the Apple, Meta, Alphabet, Amazon, Tesla, NVIDIA, and Microsoft. Okay? Now, this is, sorry. Nope. Okay. So, this is the performance, the S&P 500 return alone. This is give or take, returned around 16.2%, whereas the S&P 500, excluding those mega cap companies, returned 3.8%. So as you can see, there's a big difference here if we exclude those 7 mega cap companies. And looking at the Magnificent Seven or the 7 mega cap companies, we've returned nearly 65%. And so the concentration of these companies in the S&P 500 are at its, at our historical highs. So there's a lot of concentration in terms of weighting, okay? And so with that concentration, we have to be extra careful when looking at the company's earnings call. And so when looking at the S&P 500, these are some important levels to watch. The 4,300 level, which has already been broken. And next up is the 4,200 or 190 level, which is right around its 200-day simple moving average. And it's also the 50% retracement, year-to-date retracement from its peak to its low, okay? And so why is it important to watch these companies and their earnings call? So we'd want to look at their revenue and their earnings per share if they beat those forecasts. And more importantly, we want to look at their outlook on the upcoming quarter to see, how does their revenue growth look like and what are they projecting into the future. And so with that being said, if we get a better than expected upcoming earnings from most of these companies, we can expect the possible bounce back up towards the 4,600 level, which is around its year-to-date high. And if we get a drop from the 4,600 to the 4,200 level, that's probably around a 10% correction from that recent rally high. Thank you, everyone. I hope you guys enjoyed the presentation. I'll be at booth 100. What we do in Multibank Group, we provide our clients with daily newsletters, weekly newsletters, all highlighting the importance of financial market events and free seminars for you to better understand financial markets and help you with trading. I'll be at booth 100. If you guys want to talk about anything, just come join me. Thank you.